Okay, right. So let's do question 97. I mean, question 96 is the same as question 95, just that you have a loss in in here. It literally is everything's exactly the same. All we're doing is, instead of, again, same thing, we're just putting in a loss of 4350, and so you just literally put in here. You will have, because he says less and less, so they're telling you, signaling for you to put in 4350 and to also put in the drawings as well. So I'll let you finish that. There's not, literally it is a repeat of question 95. So question 97, I'm going to use double entry because I still think this is the best way to think about this, so that you know where these figures are coming from. So your profit is, of course, we've been talking about profit so far. Profit, as you know, is a credit because we add profit to capital, 220,000. We add profit to capital and 220,000. It's a credit because the difference between income, this is your income statement, right? I'm going to make this up. If your revenue was 320,000, this is revenue, and all your expenses are 100,000, you can see that you've made a profit of 220,000. Well, that is, if you like, a credit heavy account, isn't it? Credit heavy account. So that's kind of the first point from a double entry point of view. I mean, everything capital, and when we're building up a capital account, they're all on the credit side, aren't they? So you want to be comfortable with this fact that this is a credit, right? So what's happening here? Appropriation is really an appropriation of profit before we share it, right? And so the question says that, listen, you have a partnership situation here. I'm going to give this to Gertrude. I'm going to give this to Eddie, and I'm going to give this to Polonius. The partners are Gertrude, Eddie, and Polonius. The year end is the 30th of June. So it says that their annual salaries are the following: 18 nil and 30 and 36. Let's just look here. And then there we are. So it's all for the year. It's for the year. So that's the first point that I want to stress. It's all for the year. So we're not halving or nothing interesting that way. It's all for the year. So let me just change my pen color. So my pen color is the annual salaries, of course, is really, the idea here is that this is really a share of capital. So I'm going to take out 18 out of here and give that to Gertrude. Eddie's getting nothing. That's fine. And I'm also going to take out of here 36,000 and give that to Polonius. Remember, these are their current accounts. Current accounts. Current accounts. Their current accounts. All right? These are their current accounts. Then it says that change their pen colors, so I can deal. So I've done this now, right? And then it says here that their interest on capital, if you remember, interest on capital is a share of profit. It's sort of rewarding them for the amount of capital they put in. So the more capital they put in, the more interest they get. So I'm taking that out as well. 2,000, oops, sorry. Let me change that pen color here. 2,000 out of here, and 2,000 here. 2,000 out of here. 2,000 here, 2,000 out of here, 2,000 here. Right? There you are. So you have that. You have that scenario. Then there you have this dealt with, right? So you can see. Let me map it to the question. So here we have right now. Let me map what I've done so far. So here I have right now 220,000. So it's telling you to take away what I've just done. It's just the same thing. So you can see the parallels, right? And that's the parallel right there. 1,800, 18,000 and 36. 18,000 and 36,000. 18,000 and 36,000, right? Then we have the interest on capital, which is the 2. We're taking away the 2, right? Right, very good. And then there is this business here about the sales commission. And the sales commission, again, these are all shares of capital. Let me take those out of the way. So that would be, let me do the double entry first. Oops. Double entry first. 8250. Gertrude. 8250. Then you have 6800. Eddie. 6800. And finally, Polonius, 4715. 4715, right? And so if we repeat this process, 8250, 8250, 8250, 6800, 4715, 4715. Can you see that? So hopefully you can sort of see where all our figures have come from. And so now what we do is we deduct all of this, and whatever we have left is what we can now share. And it's still all double entry, because even when I want to share this, I'm still literally just going to go debit all of this, and I'm going to put all these figures here, right, respectively. And that this will close this profit appropriation account. It just is a T account. So let's do that. I think we can do that from here now. So focusing on here, let's get that profit. So that's 220,000. Take away 18,000. Take away 36,000. Take away 2,000 3 times. Take away the 8250. Take away 6,800. Take away 4715. I get, my additioning is not the best. I don't know why nowadays. I get 140, 235. Seems a bit of a strange number, but I'm going to go with it for now. Then it says that we split this number in this ratio 40, 40, 20. If you now split that in the ratio 40, 40, 20, so 40, 40, 20. So literally take 40% of that. Oh, it's worked out somewhat okay. I get 56094, 56094, as these are both 40%. And of course the difference from that is 28,047, right? And that's 142,355, right? And that's how you have that. Cool, great stuff. And that is question 97.